unlocking the potential of money. You cannot achieve wealth by simply trading your time for money, no matter how hard you work. There are limited hours in a day, and unfortunately, you won't earn any income during the time you take for rest, sleep, and other activities. However, is there a simpler route to financial success? What if your money could work on your behalf? What if it could be the perfect employee that never requires breaks or a salary? Your money can work tirelessly, generating more money for you around the clock all year round. Fortunately, there are numerous ways to make your money work for you and earn more income. While you dedicate 40 hours each week to work, your diligent dollars continue working non-stop. In today's video, we will reveal strategies that demonstrate how money generates more money. Before we dive into it, please show your support for this video by giving it a big thumbs up and commenting below on the topic or video you'd like us to create next. Now let's jump into it. High yield savings account. A high yield savings account can act as a secure foundation for your wealth before venturing into more profitable but riskier opportunities. These accounts are FDIC insured and typically offer an interest rate that is 20 to 25 times higher than traditional savings accounts. This allows your money to grow while waiting for other responsibilities. For example, suppose you have an additional $10,000 and you're unsure of the best way to generate returns from it. By keeping it in a high-yield savings account with an annual percentage yield, you can ensure that your money is being utilized effectively. Choosing an APY of 2% will result in a yield of $200 in 1 year. While this may not seem like a fortune, it is still a better option than leaving your money in a regular savings or checking account that offers about 0.1% APY. Some people might argue that keeping cash under your pillow is just as good, but every financial planner will tell you that it's important to have at least 6 months worth of living expenses saved up in easily accessible cash as emergency funds before considering other investments. When it comes to emergency funds, it's best to keep them in a high-yield savings account where you can easily access them when needed. You can open a high-yield savings account with your current bank, but it's worth noting that online banks typically offer the highest interest rates. Online banks are able to keep their costs down by minimizing physical locations and passing on these cost efficiencies as higher rates to their customers. Retirement planning involves several investment options, but the most crucial are 401k and IRAs. These are investment accounts where your savings are invested in the market, offering exponential growth. A 401k is an employer-sponsored retirement account suitable for individuals who struggle with saving money. Since contributions are deducted from your paycheck, it is an excellent way to set money aside for retirement. With a 401k, you invest pre-tax dollars, which lowers your taxable income for that year. To maximize the benefits of your 401k, it's best to start saving early and contribute as much as possible. Once you've set up your emergency funds, the next step is to optimize the tax efficiency of your 401k and invest in the markets to make more money. If your employer matches your contribution, try to go for the maximum limit to take advantage of the full benefit. Besides a 401k, you can also consider independent retirement arrangements such as a Roth IRA or traditional IRA. The primary difference between the two is that a traditional IRA accepts pre- or after-tax dollars, grows tax-deferred, and withdrawals are taxed as current income after the age of 59 and a half. On the other hand, with a Roth IRA, you contribute after-tax dollars, and your money grows tax-free. Additionally, you can make tax and penalty-free withdrawals after the age of 59 and a half. While IRAs and 401ks are popular retirement savings plans, there are other lesser-known options, including SEP plans, PSPs, HSAs, and others. Regardless of the plan you choose, it is wise to start early and leverage the power of compound interest to grow your nest egg. Investing in mutual funds, CDs, ETFs, stocks, bonds, and other financial assets can help diversify your portfolio and minimize risks. Overall, planning for retirement is a long-term commitment, but with a strategic approach, it is achievable. Investing in the stock market can provide a snowball effect, where your money exponentially grows over time. For example, if you make a single investment of $20,000 on your 20th birthday and it grows at a conservative rate of 5% annually until you retire at 65. Your initial investment will compound to approximately $90,000. It's worth considering investing in the stock market if you want your money to make money for you, but it's important to avoid timing the market or day trading to take advantage of fluctuations. Instead, a long-term investing strategy, also known as a buy and hold strategy, can be a more conservative approach. With a buy and hold strategy, you buy securities such as stocks, mutual funds, bonds, ETFs, etc., and hold onto them for a long time. This approach reduces the risk of being subject to short-term market fluctuations. As a long-term investor, you'll hold onto your investments with the hope that in the future, the sector you invested in will have grown substantially. By riding out any new developments over time, you hope that your investment will yield a reasonable return. Over time, fluctuations should even out, resulting in an overall gain. Assuming an average annual return of 10%, a $10,000 investment would yield $25,937 after 10 years. Even better, if you add $5,000 yearly to your portfolio, your investment will grow to a whopping $105,624 in the same period. If you don't have the time or skill to handle your portfolio personally, robo-advisors such as Betterment and Wealthfront can automate your investment portfolio using advanced algorithms. They will create a bespoke portfolio based on your goals, risk tolerance, and other preferences, giving you a diversified portfolio made up of multiple funds to minimize your risks. Other ways to invest your money in the stock market and have it create more money for you include index funds, individual stocks, target date funds, and real estate investment funds. Investing in real estate is a great way to get your money to create more money for you. You can invest in residential or commercial real estate. Real estate investing can make you money in two ways: appreciation and rental income. A property appreciates or increases in value with time, and you turn a profit by selling it. When investing in real estate, bear in mind that property appreciation is fast-tracked by location, improvements, and development. Location is the most critical appreciation factor for a residential property, especially when facilities such as transit routes, shopping malls, schools, and leisure facilities spring up around a neighborhood. Investing in the stock market and real estate can help you grow your wealth over time, and there are many ways to do so. By choosing a long-term investing strategy and diversifying your portfolio, you can minimize risks and maximize your returns. With careful consideration and planning, you can make your money work for you and enjoy the benefits of compound interest and appreciation. Real estate is a lucrative investment avenue that offers numerous opportunities to earn a substantial amount of money. One way to make money in real estate is through rental income, which involves tenants paying a fixed amount monthly, known as rent. This applies to both residential and commercial properties. Let's take a look at some actionable ways to start earning from real estate. Flipping is a popular strategy that involves buying a property and improving it within a short period, then selling it for a profit. To succeed at flipping, you must have an eye for viable properties and determine the underlying cost involved in improving the property to the desired level and its potential value. Additionally, you should be able to fix up the property yourself or hire a renovation firm. Buy and hold is another way to earn money in real estate. This involves purchasing a residential or commercial property and renting it out. You can opt to manage the property yourself or hire a management agency to take the stress linked to being a landlord away from you. Vacation rentals are also an option for earning money from real estate. You can earn some money by renting out a house or room on a short-term basis. Companies like Airbnb have made it easy for homeowners and property investors to cash in on this by catering to travelers. This is especially profitable if your property is located in a well-known tourist destination, as the demand for such arrangements is high, with many vacationers preferring it to staying in hotels. Real estate crowdfunding is an ideal option for those who don't have much access to capital. Traditionally, investing in real estate requires a significant amount of money, which has made it the sole preserve of the rich and those with access to financing. However, crowdfunding real estate deals have taken off in recent times involving the process of pooling resources together to invest in real estate. The best part is that you can start with as little as $100, and there are many real estate crowdfunding platforms where you can own a piece of high-value property with a mere tap on your smartphone. Starting your own business is another way to make a lot of money. Although it's not without risks, putting your money in a startup can pay off handsomely. If you can't stomach the stress of getting a business off the ground, you can be a silent partner by putting down your money in someone's venture. You won't have control over the business's daily running, but if all goes well, you will share the company's profits without breaking a sweat. Investing time and money in improving your marketable skills is another way your money can work for you. Look for certifications and professional degrees that make you a high earner and highly sought after in your industry. It doesn't have to cost you a lot, nor do you have to go to an Ivy League university and spend 4 years. Many online courses offer an opportunity to further your education at a reasonable cost and get certified in your interest areas. In conclusion, there are numerous passive income sources that can help you make money without exerting much effort. The tips above are just a few examples of how your money can make money for you. The best part about passive income is that you continue to earn once you set it up, even while you sleep. However, all of these methods require a significant upfront investment in time and money. The list is not exhaustive, and there are many other passive income sources out there. The most important thing is that you now know how money can make money, so pick one and run with it. Stay tuned for more videos, and please don't forget to click like and subscribe to my channel.